All right, welcome back everybody to the Weekly Rebalance. We're covering some exciting stuff today. We're getting further and further into the year, so more year-to-date performance to unpack, and some little bit of research to go through as well. Welcome back, Nick. How you doing?
Thanks, I'm doing well. How about you?
I'm doing pretty well. Can't complain.
Good to
Got an
hear.
exciting day today. NVIDIA coming up after the bell.
I know. Big news day.
Absolutely. Well, we're going to cover, we'll get right into it, do our market update, and we're going to cover an interesting topic this week in our research covering weather and its effects on markets. So we'll do a little bit of a deep dive into that and do some trivia, especially with all the weather across the East Coast this week. I read something like 11,000 flights were canceled early this
Yeah,
week with all the weather.
yeah. Certainly surprising. I know in Virginia we didn't really get much of anything, but further up the East Coast definitely hit pretty hard.
Yeah, yeah. You'd think we'd figure out how to deal with that yet, but not yet. Still no power over Mother Nature.
Yeah.
Yeah. Well, I just pulled up Bloomberg and pulled up the World Equity Indices screen. I mean, we're still positive for the most part across the board. If you look at that year-to-date numbers, the only one that's negative is actually the Nasdaq now. The S&P rebounded a little bit a couple weeks ago when we looked at this. It was negative. So we've got some returns that are positive for the year, which is nice.
Yeah, definitely. And I think an interesting thing last week, we talked about this rotation into value performing very well year to date, which is still holding up. Just, I think an interesting thing to note was actually last week was, I think, one of the first weeks we actually saw growth. The NASDAQ, the S&P outperformed the Dividend Aristocrats Index.
Yeah.
Last week I was taking a look at it. I think the Dividend Aristocrats Index was down 0.28%. We had the NASDAQ and the S&P 500 up 1.53%, 1.11%, respectively. So that's a interesting little divergence from the trend here. We are in the middle of earnings season, though. We've got NVIDIA reporting at the close today. These growth names have sold off. We've seen some weakness here recently, so kind of makes sense we'd see a bit of a bounce back. But just an interesting thing to note again, since we've talked about that value trend through the
Yeah.
beginning of this year.
Well, I was just looking at this. This is before the action today, so different numbers than I just quoted or just had up on the screen there. But the S&P value is positive 4.28% this year. The S&P growth index is down 2.19%. So it just shows the differential between growth and value, which has been extreme this year.
Yeah.
And if you extend that even further, the S&P positive 0.82, right? But this was before today, which is it's up today. But then if you look at the S&P Dividend Aristocrats Index, which again is the roughly 60 to 70 names from the S&P 500 that have all increased dividends for at least 25 years, that's up 9.5% for the year. So the return differential is crazy there. And the Qs, I just put in QQQ here. If I put in the NASDAQ, I should have put in the NASDAQ in the first place, but it should track the same. That's actually, it's like we said, down 1.5% for the year. So really big performance differential there. Now, we've seen the performance differential go the other way as well the last couple of years. So different market. There's a lot of churning and rotation going on right now especially in US markets, but really in global markets as well. You look at the world equity indices again, just look down that list and see look at some of those big numbers, some of these big numbers, international markets, again, doing really, really well.
Yep. It's been a interesting year so far. Continuing some trends that we started late last year. Value international performing very well. Yeah, it'll be. I mean, we'll have to watch after the close here and see how NVIDIA's earnings are. I think that's going to be a really big bellwether for tech.
Yeah.
And if they really knock it out of the park, we could see tech really rally here, maybe take back some of the levels we saw earlier this year. But certainly seems like there's some momentum growing in value. Some of these less loved names, I think that's a trend that's likely here to stay.
Yeah, absolutely. For sure. Well, the other thing that I was thinking about was, we've seen, I was curious on this particular name. I know we don't normally talk about individual stocks all that much, but a lot of the data center REITs have been doing really well as
Yeah.
well. And I think there's something to that because you're right. We've seen this pressure on these big tech names and these hyperscalers, but if you look at they're still spending money. They're still planned on spending huge amounts of money, and as they do that, it's trickling down. They're building data centers. Like I went to the auto show this last weekend. It's at the IX Center here in Cleveland, and it's the last year at the IX Center because the IX Center is being turned into a data center, and it is crazy. It used to be a tank factory, right? So in World War II, they built it because they needed to build tanks. Built this massive building. Like I don't even know how many square feet. It's just insane. You've been there, Nick, I
Yeah,
think,
yeah, yeah.
and turning the whole thing into a data center. It's insane. But that spending is real. Now, I think the pressure on some of these names is, well, maybe they're not going to materialize as their profit margins are not going to materialize as quickly as we expected, but they're still spending that money. And you look at a company like this is Equinix.
Hmm.
I think I pronounced that pretty correctly, but EQIX is the symbol. Look at that return right there. And this is something that we've been expecting. EQIX, American Tower, another good one. Any of these data center REITs, EQIX is specifically very focused in data centers. Um, and that spending is coming their way.
Yeah, for sure. And I think it ties into our discussion that we had with Brian Mulberry last week. If you guys haven't watched that interview that we did, that webinar, please go back, check it out. It was a great conversation we had with Zacks, one of their top people, Brian Mulberry. And he was talking about the names that we expect to perform well at this period in time. And specifically, he highlighted Deer, which,
Yeah,
funny enough, had an excellent week last week, 9%. But also other names like these that are on the initial build out of all of this AI infrastructure. These are the names that have been performing well recently. Another good one would be like GE Vernova, the
yeah.
industrial name, making gas
Caterpillar.
turbines.
Yeah,
Just taking off recently, and really doesn't seem to be an end in sight because the demand is there. They're continuing to build these things. Whether it hits uh, some of these other software companies' bottom lines or not, at this point, they're building it out. So these industrial names are definitely benefiting from it.
yeah. Caterpillar, another one. What's the industrial sector done this year? Let's just look at this. Let's look at the S&P, look at the map of the market here. Historical performance. Industrials positive 13% for the year. Energy
Yeah,
positive almost 22% for the year. Materials positive almost 17% for the year. So those are all those a lot of it, energy, materials, industrials, utilities, all positive, big real estate as well. I think the S&P real estate would include some of those those
yeah,
REITs. I believe I believe so. But I mean, of the one, two, three, four, five, six, seven positive sectors for the year, I would say one, two, three, four, five of those seven are heavily connected to the AI spend. They're just not the infotech names that are the hyperscalers from last year. But it
nope,
makes sense that they're positive. And most of them are positive. Every single one of them is positive more than 8% for the year. And only one is actually positive less than 10% for the year of those five sectors.
yeah, it's really something.
Yeah. Very, very interesting change of events. But not, shouldn't be totally unexpected. And like we've said many times on this podcast in the past, it's not a um, bearishness on AI to think that it's going to trickle down to the rest of the economy, that it doesn't make sense if it truly is going to stick around forever. And it's a truly monumental change, something like the internet coming into play in the early 2000s. It's going to trickle into the rest of the economy if it's here to stay, which I think it's here to stay. So it can't stay concentrated in 8 to 10 names. It has to spread out to the rest of the market. And we're starting to see that happen this year with different sectors that are not explicitly hyperscalers, that aren't explicitly making chips like NVIDIA or um, a company that's producing, Google with Gemini and their actual products being directly related to but AI. But these type of companies, they're part of the build out. If this is really here to stay, they have to benefit, and they're going to benefit. And we've already seen that start to materialize this year already.
Yep. Yep.
Interesting start to the year.
Definitely.
More to come. Well, should we move on to the research of the week?
Yeah, let's do it.
Sounds good. Well, you know, the reason we thought to present this was just the weather that was going on this week, the crazy snowstorms, the flights canceled and whatnot. And we figured we'd put some context on historical weather impacts on markets. So, Nick, what did you find in that realm?
Yeah. So, I mean, I think this is timely for a few reasons. One, like you said, brought it up because of the winter storm that we're experiencing in the Northeast. Uh, and then on top of that, it also coincides with one of our strategies and a change that we made in one of our strategies, one of the positions we exited a little while ago. We had a natural gas position that shot up following the prior winter storm
Yes.
and exited that. Had a great return in that strategy year to date, up about 40%. So super pleased with that. Natural gas, I think, is like, at least in my head, and with the recent addition or subtraction of that position from our strategy, that's the one that comes to mind. Natural gas as a commodity is pretty volatile, for one, and for two, it's very correlated with the weather, specifically the weather in the Northeast. If it's cold in the Northeast or a lot hotter than expected, there's a lot of energy demand. A lot of energy is produced with natural gas as a fuel. So you see it in commodity prices for natural gas. Any sort of commodity, pretty much, if you got to grow it, it depends on the weather, and it can be heavily impacted by that. But in addition to that, I mean, there's plenty of just stocks in general that are impacted by weather. Just off the top of your head, yeah, insurance, for one. Insurance is going to be heavily dependent upon, catastrophic weather events being more frequent or less frequent than anticipated. Things like that. So there's a lot of ways that it relates. Yeah.
Yeah, absolutely. I mean, it seems, we're talking about a winter storm that created some volatility in energy markets, right? We had one in January, right? I think I
Yep.
was stuck in Dallas for that
Yep. Yep.
because of
Into
that
January.
storm. Yep. We had another one recently, and those are more trivial in some senses, but they can create some volatility in energy markets. But there's some very meaningful effects coming from weather disasters, right? So pick on a couple examples here. 2011, Thailand, the entire country's GDP growth gone for the year, right?
Mm-hmm. Yeah.
The 2014 winter storm in the United States, uh, and some of the storms this year create material losses that are permanent for some energy companies, right? Hawaii and the wildfires in August 2023, major catastrophic event that affects insurance companies, but also affected a huge market, the municipal bond market. So it not just affects equities, it can affect fixed income, it can affect the country's, the economy as a whole. I look at Hurricane Katrina as another good example. Any of the hurricanes in Florida and on the southern coast of the United States, those are extremely valuable properties that are destroyed. The economies are severely disrupted. So it's a meaningful issue. So I pulled up some stats on this. Between 1980 and 2024, the U.S. experienced 340 weather and climate disasters exceeding $1 billion in damages. So pretty meaningful and somewhat frequent, to be honest.
Yeah. Definitely. Yeah,
Yeah.
I found it interesting looking into this topic. If you pull up certain insurers, RGA is one that comes into mind, Reinsurance Group of America. It's funny, if you watch the price chart of a company like that, it's pretty much what you would expect. If you see a large dip, you can pretty much type in that date and say weather event, And you can see, oh, hey, we had like a huge cyclone breakout in the area that this company covers really closely. So not that that's going to come as a surprise to anyone, but I think just at a broader level, just realizing how much weather can play a role in markets, it's fascinating.
Yeah, definitely. So if you had to guess, what are some of the most weather sensitive sectors? If you had to think through what are the most
Yeah.
commonly affected sectors?
Um, let's see. I mean, insurance has got to be
Yeah,
has got to be up there.
yeah,
Utilities,
yeah. It's got to be utilities.
probably. I mean, anything agriculture related is going to be
Yeah,
impacted. I don't know. Anything else on your list?
yeah. No, the only in I mean, I think you covered it pretty well. I mean, a lot of companies can be affected. I don't know if anyone's completely insulated, but the ones that are coming to mind for me are particularly, industrial names, materials names, consumer staples. That is where agriculture sits. So,
Yeah,
you can there's some large effects there as well. But um, oh, within that, also like casinos and hotels, tourism related items,
that's
those can
true.
have
Yeah,
big shutdowns and losses as well, significant revenue losses if they get shut down for an extended period of time. And sometimes they're shut down for, you know, not just a couple days during the storm, but months or even years afterwards.
yeah, yeah. That's an interesting one. I did find some research on that as well. Just travel companies particularly getting hit, which again makes sense. I don't think anyone's all that surprised by that. But when you're making small talk before you start a meeting and talking about the weather, I'm not sure that we're doing it because we're portfolio managers.
No, most of the time, and at the end of the day, we don't have much control over it. What are we going to do?
One of the other things to take this in a little bit of a different direction, one of the other things I found, there was a great article that was written by the San Francisco Fed a little while ago. I think this was last year in 2024. And they were looking into how well the market anticipates fallout from major weather events like a hurricane. Um, and they had this study, and I found it intriguing, even though maybe it's not the satisfying answer that we would be looking for or hoping for to make some sensational story out of it. But it seems like
Yeah.
in the past, the implied volatility that the market had present prior to the landfall of a hurricane was less than the actual realized volatility over the time period that was impacted by that weather event. Uh, Leading up to 2012, in fact, they did this study on implied volatility in the markets, and they found that for the most part, markets underpriced volatility or anticipated volatility going into a major weather event like a hurricane. Um, and rather notably, now after 2012, it seems like they're pointing towards Hurricane Sandy being kind of the turning point for this, and I think that's probably because it hit New York in addition to other areas, but particularly it hit New York, and with that being the center of Wall Street, financial markets as a whole potentially learned a valuable lesson there. But since then, we haven't seen a difference in a realized implied volatility and anticipated implied volatility that is statistically different than zero. So just found that interesting. Potentially our weather forecasting has gotten better. I doubt that it's by that meaningful of an amount. Potentially, this just indicates over the past 13 years, 14 years, uh, financial markets have gotten better at pricing these large scale, very impactful events.
Yeah. Yeah. Very, very possible. I mean, some of that do you think it's reasonable to say that some of that's coming from the advent of the catastrophe bond market?
Potentially,
So,
for sure.
yeah, like, so if for those that aren't familiar, the catastrophe bond market, like, how should we, define that in one or two sentences?
Yeah, I mean, this bond market that basically pays out based on catastrophes. They even had
Y-
pandemic bonds. Um,
Yeah.
for a period of time, which is really fascinating. Like right before COVID broke out, there were these pandemic bonds that were issued. That's an interesting subject for another time, but that would be another catastrophe example of a catastrophe bond. And I guess actually it's the reverse of what I said. They don't pay out if there's a catastrophe. It's like, at least that's the way the pandemic bonds were structured. Basically the principal was taken in should an event arise, but if it didn't happen, then they would get interest on this principal. But
you get so it's a way of really transferring the risk from an insurance company or a reinsurance company to the investors, right? So you should get a high yield in exchange for taking the risk, but the principal can essentially be destroyed or partially destroyed if the catastrophe occurs, right? Is that a fair way of putting it?
Yep.
Yeah. So you're basically transferring the risk, and that bond market is reached a massive, it's a massive market now, and it's gone up recently.
Yeah.
I think. Go ahead, Nick.
Oh no, I was just going to say, for like a hedge fund manager perspective, it's a good uncorrelated return.
Yeah.
For the most part, depending on what you're buying or where you're putting your money, it can potentially be a good diversifier.
Yeah, exactly. Well, I saw, let's see, I think it was 17 or 18 billion dollars in new issuance in 2024 as the example. That was the last stat I saw. And the yield is oftentimes extremely high, 15+% on a lot of these bonds. Now, you're going to have some events where there's a weather-related event and that, principal is destroyed, and your yield obviously is going to be lost or partially lost in there. But it's, markets are trying to find ways to price in the risk. And maybe that ties to what you were saying earlier.
Potentially. And I think too, just sustainability has become a larger theme in the market. We've got a lot of ESG ETFs out there, and there's a lot of other things that are baked in with that. But part of sustainability, what it's targeting is companies that can handle more frequent or wider spread weather events. That is a certain subset of that, and it's something that people are keeping a closer eye on. So, with that being a bit more of a mainstream push here recently, potentially that being incorporated as part of the ESG screen, maybe that's helping as well.
Yeah. Pretty much so. It's a really interesting market. You're right. There's a you mentioned something earlier that I thought was really interesting because in the catastrophe bond market, it's really investing in this. It's non-correlated, but it does it not feel a little dirty sometimes?
Well, I was thinking about that. You can do that other hedge fund route. You can buy viatical settlements, or you can buy fire insurance on houses that you don't own, things like that, where you're kind of hoping that the event happens.
Yeah.
I almost feel the opposite about this because you're hoping that something bad doesn't happen.
That's true. I guess in this case, you're hoping
that something bad doesn't happen. Now, again, there's an interesting debate about things like purchasing a viatical settlement, or you're providing liquidity for someone who potentially needs it. Similar story with fire insurance, but there's no doubt that it does feel a little bit, I don't know, slimy, hoping that something bad might happen.
Yeah.
In this case, you're hoping that nothing bad happens, or at least that specific bad event doesn't happen. So maybe you don't have the same ethical qualm with it that you might for some of the other stuff going on out there. But
yeah, agreed. Well, maybe cat bonds are a bad example there, but yeah, there's definitely some betting going on things like you mentioned there, that betting on catastrophes, betting on stuff like that. That's not doesn't feel so good.
Yeah, it can be an interesting debate there. And I mean, taking it a step further, we've got Polymarket becoming a larger player in the space. I think I saw the other day Kalshi is being integrated with one of the trading platforms that we work with, TradeWeb. They do fixed income liquidity. I think it's not like you can go on there and bet on whether Donald Trump mentions Elon Musk in a speech or something like that, but they use it to price credit risk in bonds using the Kalshi data. Uh, so that's becoming a more common thing on Wall Street, is actually like these gambling platforms, Polymarket becoming integrated with a lot of financial news. I think a lot of Wall Street people probably they tend to be people that also like gambling on the side. Um,
Yeah.
so it's becoming more and more common that you have straight up gambling in many respects, betting on whether Trump mentions something in a speech, betting whether I'm sure you can bet whether it rains today or not. um,
Yep.
but that's another part that's becoming really it's becoming very integrated with financial markets. I mean, Coinbase, you can basically trade bets on there now. That's a pretty core part of their platform. If so, like it or not, a lot of this stuff is here to stay, and if not growing.
Yeah. Yeah, exactly. Well, we'll have to do an update on this in a couple of years from now and see if that market has grown and how much it has grown over the next, in the coming couple of years. But I think you're right. I think it's here to a lot of that is here to stay and probably likely to grow over the next coming years.
For sure. For sure.
Well, any other thoughts that you have on the research of the week, Nick, or should we do a couple of trivia questions before we wrap up?
Yeah, I'm good with trivia questions. I don't really have anything else to add. Just a generic conversation about weather and markets.
Yeah, sounds good. Well, I've got a couple trivia, at least one that's specific to weather. So
All right, let's do it.
let's see how we go, how you get along here. All right, where's my number? Okay, there it is. So I mentioned earlier in the call, in the conversation, that between 1980 and 2024, that there were 340. This is JP Morgan research, by the way. I think I said 340 weather and climate disasters exceeding what $1 billion. What was the cumulative damages?
Yeah, it was 1 billion per event, right? Or,
Yeah,
or more than 1 billion for that. Those 340, right?
right.
Um,
Basically, more simply, over the last 45 years, what's the cumulative damage from weather-related events in the United States?
I mean, I'd say a trillion.
You saying a trillion?
Yeah.
Yeah, that's a good guess. The number that JP Morgan came up with was 2 trillion.
Wow.
A
Yeah.
lot of damage. It's a
Lots of
long period of time, but still.
lots of damage for sure. Wow, $2 trillion. I guess, yeah, 45 years. Had a lot of bad storms over that time.
Yeah. I would guess that a lot of that number, that nominal number, came in the last 2 decades too, though.
It's quite possible. And actually, I have a trivia question related to this. So I think maybe this is a good segue here.
Okay, let's hear it.
All right. Which weather event causes the most damage in the US each year on average? A, hurricanes, B, tornadoes, C, floods, D, wildfires.
I am it's a good question. I'm gonna say wildfires.
That's an interesting answer. I mean, it certainly causes a lot of damage, especially in recent years.
Yeah.
The data I was looking at said floods, and I think the reasoning behind that is the frequency of floods. Maybe not that we have like a ton of severe floods. It's just that flooding is a lot more common than a hurricane, tornado, even a wildfire, even though we've had a lot of mention of that in the news recently here, especially with what we've seen out west
Right.
recently. But floods, on average, are the largest contributor. Now, I was thinking about this. I'm wondering, like, how they, I guess, attribute it to just a flood as opposed to like flooding brought on by a hurricane or like a storm surge, um, flood resulting from a hurricane. Do they like separate
Yeah.
it out, or is it just like, oh no, that's a flood and that's like a separate thing than the hurricane? I don't know on that one, so that could potentially be skewing the results. But they're saying by and
Yeah.
large.
Well, my answer to that was coming from like hurricane season is the shorter season, and I guess that I'm not an expert on wildfires, but there's, I believe, a wildfire season as well. But
Yeah,
it's not like you're limited to that. Like any dry period, could be, depending on the climate you live in. Any dry period you can have a fire. So I was
yeah,
thinking that season was longer. That was why I was guessing that versus hurricanes, because hurricane season is condensed fairly to a certain number of months, and it's also primarily focused on one part of the country, where I feel like
yeah.
wildfires, you can have wildfires in California and Arizona and a lot of the western states seems to cover more geography. But the main reason I was answering that is I felt like that season, that it's not as restricted as hurricane season. But
Yeah,
floods, that makes sense, because anywhere in the country can have a flood too.
yeah,
You can have I'd be curious if that data included flood data from hurricanes. Like, does that count? Because I would count that as hurricane, not a flood. But
yeah, yeah.
that
A lot of flooding
it,
though.
yeah, a lot of flooding. Well, it's interesting that's a I don't know. We I heard a story where a hurricane went through Florida. The hurricane, the insurance claim was posted to the insurance company saying, "Hey, hurricane damage. I have hurricane insurance." And they denied the claim, said it was flooding. Of course, they're right on the coast. Second floor condo, there's 20 feet of water. And that's obviously from the storm surge, technically flooding, but the insurance company was trying to claim that that was actually flooding, not the hurricane, but it was clearly caused by the hurricane. So I'd be curious on how they parse that data out.
Yeah, that would be interesting to find. I mean, I know going through purchasing a house, debating whether you buy flood insurance or not, because your typical home insurance policy doesn't cover that. It's an interesting thing to go through and figure out, especially because I mean, I feel like of all things that could happen, I mean, I guess tree falling on your house, especially if you live in the woods, is potentially a little bit more of a threat. But flooding would seem to be, one of the more common things. So that's probably why they don't want to cover it. But
Yeah, yeah, interesting. This
different
is why
coverage.
insurance companies are often so hated by people, because it's silly. I was having this conversation recently with somebody, that the perfect example is that the hurricane that I was just, you know, the example I was just coming up with. It's no wonder people think insurance companies are evil. They're here to insure us, right? Whether it be health insurance, flood insurance, hurricane insurance, home insurance, car insurance. They're here to insure you, but their job after they insure you is to try to not pay claims.
Yeah, yeah, yeah,
Pay as little claims as possible. That's
definitely.
what it feels like, at least.
Yeah, it's tough. It's tough.
Anyways.
Well, I have one more trivia question that's not weather related, unless you've got another one.
No, go for it, because I kind of asked my trivia questions, or gave the answers to my trivia questions already earlier in the call.
Nice.
So I kind of ruined my I kind of ruined my trivia.
That's all right. This one's a little bit more broad. Um, what share of S&P 500 company revenues comes from foreign countries or foreign currencies? What percentage of S&P 500 companies' revenues are foreign currency?
I am going to guess 40%.
That is almost spot on. 41% is the number I've got here. It's like a year old, but
Wow.
just thought
Yeah.
that was interesting. Was doing some research on the dollar index. We had an advisor call in last week asking about the US dollar index declining, dollar becoming weaker, and potential ways to diversify for that. And like we've talked about on this program, international stocks are a good way to do that. But you also have to think, especially mega cap names that are more diversified globally. A lot of their revenue is coming in from these foreign countries and can, in part, offset weakening in the US dollar. So.
Yeah,
And there's a lot of other
absolutely.
things too that can happen with that, but
It's a higher percentage than most people realize.
for sure, for sure. And yeah, I mean, and it makes sense too, but it's interesting to watch how that tapers off as you go down market cap,
Yeah.
go down to market cap. So like even if you look at the S&P 500, this is an interesting thing. S&P 500, 41% of revenue is derived from foreign currency. If you look at the S&P 500 equal weighted index, it's 31%. So that tells us that it's top heavy. A lot of it's coming from the top.
Yeah. Yeah, very interesting. I'm sure that number would fall if you went to the mid cap names,
Yep.
the small cap names, et cetera. They're more focused on a smaller geographic segment than the rest of the globe. Makes sense. So,
Yep. Just an
good
interesting
question.
little fact there.
All right. Well, I think that concludes the weekly rebalance for the week.
Yep.
All right. Well, thanks, Nick. We will be back next week with some more market updates and we can maybe talk about NVIDIA and what happens here in a couple
Yes.
hours.
Yep.
All right. Thanks, Nick. Thanks, everybody.
Thanks, everyone.